Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for April 29th, 2022. I've uploaded the weekend reports in the chat box, in the chat room, the chat window, and then also the WDZ XLSM. That's the working spreadsheet I have for the sniper patterns. I'm using that to find the Godzilla patterns right now. It's a primitive worksheet, work in progress. All right, so take a look at some of the trades today. Today was a typical, bare normal kind of a market. There had been a nice bounce yesterday, all is well in the world, and today, big gap up, feeling good, and then all those hopes and dreams crushed once again on a Friday going into the weekend, causing maximum pain and suffering. The least surprising move of all. So I want to just show a sampling of standard work in bare normal conditions and some ways to think about the market from a professional point of view. So there was a really important article at Bloomberg from our friend Bill Scheidt, my drum sensei, which showed a report that there was $5 billion lost during COVID from mom and pop unskilled day traders using stimulus money while stuck at home. So this is part of that whole Coinbase, Robinhood, crypto, everything cool and groovy, meme stocks, all that sexy stuff. $5 billion transferred from the poor to the professionals. That's the cost, the social cost of walking out into the world unprepared for the weather. Take your umbrella. Watch out for tigers. Watch your back. So this was Cliff Natural Resources, and it's one of my standard, usual, normal targets. I trade it all the time. Luke traded it last year, all year. It was the only symbol he traded because it trades so beautifully intraday. So I want to just show this idea that I like to take some practice swings in the on-deck circle in order to time the pitcher. So you're watching him throw to the batter ahead of you, and you take a few practice swings to get your timing right. So here's where the market opened. Huge volume. This is the visual box trading MMRB. Feels about right, doesn't it? This, and just anchor it there to here. That's about a 30-cent risk box on about a $30 stock. It's about a 1%. Nothing crazy about that. So here's where it closed. Here was the gap up. Sold off, or rose up. Same bar rolled over and then closed lower. So I was tempted to take this trade, and then I would have tried to cash, and then I was tempted to take this one when it broke below the opening, because now I'm thinking it can capture the gap, which it did. Then after it reverses up, this feels like a morning hook, and I would have liked to have tried this one. And then when this breaks down, I might have tried that one. But when it breaks back up, I would have liked to try this one as a 1, 2, 3 entry, and that one would have paid off. And that's where I should have gotten out right here. If I was long here, then that's where I should get out. And now I'm ready to trade. So I take, now that I've had some warm-ups and I've had a chance to feel all this volatility and get a sense for the size of that box, I can now hang this box right here and take the short at 4. 1, 2, 3. Didn't make a new high. Exit here. So that's trade 1. It rolls over. Now everything in the market is selling off. This feels like a COTA 2, doesn't it? Here's a high. Here's a lower high. One in the bank, and it rolls over. So I just take that one right there. It's one of those risk boxes off this local top, short, and now it's working. It is well below all of this. So that's going to be well started. This one is about 1, 2, 3. This one is about 1, 2, 3. So I'm feeling I'm somewhere around 5R in hand. So here's the continuation of that. Now I want you to just feel what normal moves look like. Leg 1, leg 2, pausing, ready for leg 3, right around 26.75. So this was the COTA 2 re-entry right here, right? This was the high. That was the one that got me a COTA 2 and got me this trade with an exit right around here. The first trade was about here. Second leg here. Now this one rolls over. Now notice we still have the COTA 2 with descending highs, so that makes this one the entry, smashing now down to 26.50. So now that little hesitation that it was going through right around in here, around 26.50, now decays for about a half and then starts a 1, 2, 3. This is a good place to exit any short position that's still open. But now if it rolls over here, you want to get short right there. And down we go. So that was routine trading in Cliff. And what I wanted you to see without all the extra indicators and whatnot on there is this idea of 3 legs down. 1, 2, 3. And each leg is about the same dimension. 1, 2, 3. Now, if you go to the next higher time frame, this might be seen as leg 1. And then you'd be expecting a big leg 2. So this thing could go all the way down to 26 even. So that's how you manage it. How would I figure out? Here's a quiz for you. If this is the high of the day, how do I determine max, reasonable, intraday move? Yes, range stat. You take a range stat, you anchor that to here, you drop it down, and then however far down that is, you just read over here and say, oh, that's what the maximum reasonable move is. Now, it doesn't mean that it's always going to stop there. 1/6 of the time in the last 30 days, it went further. So if it does break through a range stat, hold on to your horses. This could be a massively good day to the downside. All right. Let's take a look at the traders today. Starting off with Tim. Pulls in another 2R today. He starts trading at this black line. He notices the kind of the Kata 2 formation, so he gets long right away and gets paid. Waits for the crossing of the PSAR and the Bollinger Band mean to get short. Does a nice capture. Tries to stop and reverse. It reverses right away, so he scratches. Maybe a little slow on the re-entry. Pretty much a scratch. Now, did he scratch too quick? No. If it's not working and you get out, that's always the correct answer. There's a million more opportunities coming. This was a quick losses. This one, I think, should have been the stop and reverse because that was the second loss in a row. You're within a fraction of the VWAP. The whole day is down everywhere you look. It's breaking through the PSAR. And then this would not have gotten you out. Then this could be a second position, and then this trade would have paid off huge. Got paid. This was a reasonable SSC. This is a great stop and reverse. I don't know that I would have tried this one after 3 upside failures in a row. Maybe I just wait for that to roll over, and then I get a better paycheck here. But then on the other hand, this is a really good recovery, so I think you just keep taking them. And then you got paid twice again. That's really good work. They all look the same leaving the station, as you notice. Didn't really feel like you were in the zero state. Maybe somewhere around in here was a need to just see a pattern and then elect not to take it. Or you could just say, I need to get into the zero state, so I'm just going to monitor the trade until I see my next favorite pattern, and then I'm going to deliberately not take it. Give that little fish back. And then if you can do that with equanimity, without worry, then you're going to be fine. But that's good work today. Luke, with the week of all weeks. Is he in here tonight? I think he's working. Well, let's see what Luke's got for us today. Z3 pinch. Standard entry on the rising tide. Second position, much better exit on 2 positions, 1, 2, 3 exit. This would have been very tempting to me, but he was not in the market, so. And then that would have been tempting to me. He's back in just in time to see the Kata 2, standard risk, standard exit, standard reentry. Still pretty good exit. I would have been tempted probably here and then stopped and reversed for there. That would have scratched. Then he gets the reentry where he should. Reasonable exit. Reasonable short scratch. Great on the long side. So this week, 53 trades. The best trade was +7. The worst trade was -1. 32 wins, 21 losses. That's a 60% to 30% win to loss rate. So that's a 2-to-1. I don't think that's right. That should be a 3-to-2. A 3-to-2 winning percentage. Oh, I see. He counted the scratch trades in among the losses. So that really is a 2-to-1 win rate. And then the size of the average win, 2.1 to 0.6. Holy smokes. That's like a 3-to-1, 3.5-to-1 payoff. So this is 2 times 3.5. That's a 7-to-1 payoff rate. And yes, that will give you an SQN of 4.4 and NSQN normalized to 100 of 6. So I've got to take some time and have this conversation right now. This is really, really important. So there's like two ways to become a perfect trader. You want to be a perfect trader. Okay, method one, make yourself perfect, then trade. Number two, focus on trading, and then through continuous improvement, begin to approach a reasonable level of perfection. Then you're perfect at trading, but at nothing else. This is my choice right here. I want to be really good at trading, good enough, focus on trading, perfect the skill, learn from the skill. Try to apply the lessons that you learned about skillful craftsmanship into other areas of your life, but first of all, trade well. So there was a discussion in a discussion room, a discussion board, and I'm going to try to capture that for you here. So in that discussion board, I basically posted the following notion. I said, look, there's Luke's 5-minute Aussie. And I said, he's a foundations course student graduate, and he's only trading the foundations patterns exclusively. And in that discussion board that I was on at the Tharp Institute, there was a kid that was asking about what kind of trader should I be? And I actually posted that earlier this week. And what I said, kind of a snarky, you might think it was snarky, but I was trying to be truthful here. I said you should take about 10 minutes and figure out what kind of a trader you are, and then start. And then figure it out. Is it true? And I said, well, all right. If I think it should take about 10 minutes, then let's multiply that by 2, and you get 20. And then let's take the minutes and roll that up, raise it up one quantum level. So go from minutes to hours. So in that board, I said, you should spend between 10 minutes, but not more than 20 hours, deciding what kind of a trader you are so that you can just get on with it and start and go and just figure it out. Because it's not like the market is waiting to see what kind of a trader you are to see if you got it right so it can reward you. The market does not have a mind. The market is simply the intersection of an infinite number of participants, all with their own time frames, risks, systems, and all this thing does is just integrate that and come up with a dynamic result that is always changing as a consequence of all these other changes out here. So it's not a thing that's out there studying you. No, it's just the integration of all the responses to everybody else's actions. And that thing is always dynamic and always moving and ever changing because there's new information and new systems all the time, and there's old stuff leaving never to be seen again. So the only constant is change. So any time on a timeline that you think, well, I'm just going to study this for this period of time, and then I'm going to get it right, and then all I got to do is I've made myself perfect and I can trade forever, that's nuts in my view. What I noticed was, and the next thing that I pointed out to those guys was I said, look, we talked about at the start of this week only needing between 10 minutes and 20 hours to figure out what kind of a trader you are. And I said, it's been more than 20 hours since I said that. And while we've been thinking about that, here's what Luke has been doing this week. And I said, now here's a system quality number of 6.6 with no overnight risk. Just trading the Aussie dollar on 5-minute charts, and he's a student. So if you claim to be a teacher, show me your students. I made these notes. Please note that he has meticulously recorded the last 2,000 trades over the past 18 months and dutifully posted those trades in our chat room every night for public coaching, which we have recorded and archived and added to the Foundation's course. And he's been doing this with no overnight risk while running his CPA business, while being a good father to 7 kids and a husband to his amazing wife. And he had no prior experience in trading. So I told this kid, now, take as much time as you need to make a decision about what kind of trader you might optimally be. And meanwhile, we're just going to be over here trading what we see while also trying to decide what kind of a trader we are. Now, a trader would actually look at that question of what kind of a trader am I, and would say, you know what, any answer I could come up with is only a temporary answer anyway, that's based on the current market conditions and your evolving objectives. Because how you trade should be driven by what the market is offering. Or are you going to just keep trading persistently and force the market through power of will to reward you? Good luck with that. So the market can't hear your plan or know what you want. It just mindlessly, or is it mindfully or accurately? It just mindlessly integrates the actions of all participants each moment and is therefore the ultimate chameleon. So the answer, what kind of a trader am I? I'm a trader. That's all. Well, he took a look at that and then he said, hey, thank you for responding, because not many other people were. In fact, nobody else did. Because everybody's got their own thing to do, and they're all trying to answer that question. So he said, well, what do you think I ought to do? So, what do you think I told him? Make an estimate in the next 5 seconds about what you think I told him. Okay, time's up. And I told the following story. I said, if I were a wood carver, and I had taught a guy to carve wooden bowls in a standard way until he had perfected it, for all practical purposes to any reasonable standard, and after 18 months of due diligence, he reported back to me with his documented efforts, which, by the way, I had seen with my own eyes on a daily basis because he posted his daily work and performance and got coaching. And we had the foresight to record everything because that's what accountability means. And then I had seen that guy become a full-time professional carver of wooden bowls. And then suppose that I was asked by another person who had an eerily similar background and skill set as the first carver, and that person asked me, can you recommend a way to become professional in the ways of carving wooden bowls? Can you imagine how strong the impulse is to just say, well, go watch Luke and do what he's doing and start right away on Monday? There's a strong impulse to say that. Honest. So what I've learned to say is, well, son, here's another story. Think about it for a while, and unless you have a better idea, which, by the way, I will help you examine in the standard way that we have for examining proposed trading plans, using the criteria of suitable, feasible, acceptable. If you come in with an idea that you think might be better than just how to carve wooden bowls, maybe there's not. You should think about it and use your creativity. Don't think more than 20 hours about it, though, because whatever you think about has to beat the baseline of what we just saw. And we're going to take the better idea of this or that. We're going to use, when we evaluate your criteria and whether or not that other one even works for you, suitable. That system seems to solve the problem or seize the opportunity which I tentatively see in front of me. It's feasible, which means that it seems like it's affordable, within reasonable resource constraints, which is not just money, but time, focus, attention, energy, family, work, spirit, all of that stuff. Those are all resources. And whatever you propose to do must be reasonably affordable within reasonable resource constraints. That really means over the long haul, like you can sustain it. And it must be acceptable, meaning it doesn't violate my values, morals, and ethics in the performance of that. And I said, whatever that is, the baseline that Luke's trading, that seems to be a method that you could learn in about 1 hour, good enough to start trading, and within a month, you should have major progress. And I offer as example Tim, Griff, Luke, Ken H., my brother, Ed. The list goes on. You can learn the method cognitively in an hour, and then it takes continuous applied practice to learn how to just carve a stinking wooden bowl. Because it's not easy. And oh, by the way, this is a system that can be used on any day of the week in any market with almost no prep, using the principles of standard work. You trade under your conditions. So, if I was going to give advice, and then I said, at this point, I would have forgotten what the original question was because I get lost in thought at my age. I said, oh yeah, that's right. You asked me for some advice about what to do. Here's my advice. Look around, make a list, pick one, go, and then learn. Now, it turns out that this young man is an entrepreneur, a successful one, and a very disciplined, skilled athlete in soccer, plays professionally, among other things in his life. So then I asked him, I said, look, I know that you're an entrepreneur and a successful one. You built a business from scratch that is earning mid-six figures. So what would an entrepreneur do with the question that you just asked me about what you should do? I said, do you know any entrepreneurs? Kind of snarky. And I said, yes, I know that you know an entrepreneur. You shave his face every morning. And I said, now, if this were a business opportunity in your area of expertise, you would know exactly how to answer this question. And here's the point I want to make. Trading is the least unique, the least magical, special, mysterious thing that I've ever encountered. Trading is literally, do you want this or that or not at all? That's all it is. Trading is literally, trade a low-risk idea immediately with proper position sizing, get your risk out, and learn about the trade going forward, and then learn about your system going forward using evidence. So I said, what is your cycle time for doing rapid, agile, safe, and controlled experimentation? You should be using this principle right here. Here's your recipe. Fail fast. Fail now. Fail forward. Fail by design. Fail under controlled conditions. Gain balance and learn to walk. By age 3, kids are walking and talking. That's pretty reliable brain for learning how to do exactly that way. You want to learn how to walk? Try to walk. You want to learn how to trade? Trade. And then I told him, look, if you think about this for another year, and then you come back and ask me the same question, I am about 85% confident that I'm going to paste this answer in with little to no editing. And so finally, how much certainty do you need? And how long does it have to be good for? And why do you need that much certainty? since we're here, I'm going to talk about this one. So this is the one I just did with Cliff, and I was talking about 3 practice swings, then get in the batter's box, take a cut at it, and remember, you got 3 strikes before you're out. 3 losing trades in a row, you should probably just take a break. So this is a lesson that is in the Creativity 202 course. Which, by the way, if you use the coupon LSA, you can get 20% off. Now, this is the lesson from the Creativity course. Study those CLF charts. See what you see, and then read the text below. Then go back and study the charts again after you've read that text and thought about it. What did you notice the second time that you didn't notice the first time? Any difference in there we might attribute to the impact of this text on your brain to shake you out of your traditional methods of seeing. And then your task is to journal your findings for later review. And then your job is to come to the weekly office hours for the Creativity course in order to discuss them with your cohort. And it turns out that your cohort is going to be anybody and everybody that comes to the weekly meeting. And it turns out that even though there's 30 different lessons in that course, it's better for creativity when members of the cohort are all working on different exercises and different lessons, and they just come to the office hours to talk about the aha moments that come out of the journaling. Because that's the so what. Because we're going to be talking about the things that triggered creativity in us. That trigger is going to go affect all these other brains and may generate some aha. And then in the discussion, like the 6 blind guys seeing the elephant, the creativity discussion and brainstorming from all these people working on different things is going to be extraordinary. That's more powerful than everybody trying to stay on schedule with the same lesson and just do the same work. No. You go at your pace, so no matter where you, if this is time, no matter where you start that course or how fast you're going, everybody's going at their own. We just take a thin slice of that, and wherever you are, you come to talk about some amazing insights about creativity for an hour or 90 minutes with creative other people about trading. Are you kidding me? Do you know how much power there is in that? When you combine that kind of response to world-class teaching, it's astronomically good. Works like a champ every time. So, think about trading like you're thinking about playing baseball. Remember, you get 3 strikes and you're out, and you can take some practice swings, and you get to study the other pitcher. A scratch is a foul ball. It doesn't even count against you. And if you get a no-lose plus dinner for 2, that's even better. That's like getting a free ticket to the next game and a couple hot dogs and a beverage of choice and a souvenir cap to go along with it, and free parking. So I think you might want to be a contact hitter with good fundamentals who pays attention to how you swing the bat each and every time, and that you study your swing mechanics by looking at game film relentlessly, and that you learn to hit to all fields instead of always just swinging for the home run fence. That guy gets the biggest paycheck from the people that are there for the entertainment value, but in terms of a reliable guy that wins, it turns out that the contact hitters who get on base, who wear out this is Moneyball. So, whatever your favored choice is, you got to be true to who you are while you're learning to be who you are. Choose your style, be who you are. Remember, it takes all kinds to make a team. For example, you want a Golden Glove winner with a strong arm at shortstop and at second base in order to handle all the routine grounders routinely. That's like things that don't make range stat moves. And you want an all-star catcher who's managing your pitchers psychologically and who's making the call for the game, who has studied the other team's hitters and knows their preferences. The catcher is the only guy that can see everybody and sees the whole playing field in front of him. Pitch comes in, he sees the whole play unfold in his natural field of vision. That's why every championship team has a great catcher. You can hire pitchers. A catcher, wow. Or if you prefer a different model, every Stanley Cup champion in hockey has an amazing goalie. You don't win championships without a great goalie. The goalie needs to be good enough to give your team a chance to win every night. A B goalie who gets hot is pretty good. A B goalie is a goalie that makes every save that he is supposed to. An A goalie makes all of those saves, plus he makes a lot of saves that he isn't supposed to make. Now, a B goalie can get hot and temporarily become an A goalie during the playoffs. And that's why we play the game. Now, think about those things and envision that. And then go back, and study these charts one more time through a different lens where your brain has been primed to think about an entirely different kind of athletic competition and thinking about how that metaphor or analogy relates to trading. Now study the charts through a new eye that has been charged up with different points of view. And then notice what you didn't notice the first time. Journal your findings for later review, reflection, and then come to office hours ready to talk about that. That's what the creativity course lesson is like. Although you get a full set of exercises from 30 different chapters of Fletcher's book to generate and stimulate the generic creativity muscle, but also a world-class training exercise like you just see here from a trainer of professional traders and an expert in adult education and experiential learning for the last 30 years. You put those two things together, that is unique in the world for creativity applied to trading. That's what we're getting ready to start. That 20% discount is good through the end of May. I'm going to be investing a lot of time in that. All right. So I wanted to say those things about the psychology today because this last 2 weeks of the bear has been a fantastic opportunity for people that can let go of their bias and directionality and simply follow what the price is telling you, what the indicators are telling you. And Godzilla came along just at the right time to make that point. And that's what Luke does right there. That is what a wood carver does. 2,000 trades, only one trade worse than a -1. And we beat him up on that. I think it was a -1.4. That's the only thing I know. All right, Michael, bravely offering his charts for review. This is how I know he's going to succeed. In our judo and jiu-jitsu dojo, the guys who got their black belts fastest, who learned the quickest, were guys that came in as white belts and who went up to each and every black belt every lesson and said, I throw you, you throw me, and they learned by getting thrown in public and getting better a little bit every day, fearlessly. All right, so this is on euro dollar, 5 minutes. Starts trading here at the blue line. He notices it caught a 2. Stalking a bit late. The move already started late entry. Yes, because you could have been here. Because this was already breaking out of the Z3. That makes this, instead of a scratch, almost a 1R win. I don't mind this exit here, but I actually think 1, 2, 3, you could have been out here. And now that becomes a really good trade. And then a re-entry is right here. 1, 2, universal entry. And then you won't lose money on that trade. This was a little late. We should be getting in at the PSAR flip instead of here. That little piece, it starts adding up. If you take this one, now here's the dragon horns. That means you want to be exiting right here. Not down here. Then this is where the crossing of the dragon, we should be getting long here. Not later than here, which is still pretty good. When you get that much, you can't get out here and turn that into a loss. You have, when it's that close, you got to take half that bar and just get out here and get paid. Now, here's a high, a lower high. That's where you get short with a risk box right there. You get out here when it crosses, when it touches the dragon. This might have tempted you in, but then you'd have scratched. And then you get short when it comes out of the dragon again, instead of down here at Z3. At least you got it before it crossed the VWAP. But if you get it in here short, then when it crosses and hesitates and then crosses, this is your second position. This is maybe a third position. And now it comes down, you got the 2 dragon horns at Z3, then you get out here instead of here. And then that becomes massive. Then you have, okay, he stopped here, but this is where the Kata 2 would be, paid. Kata 2, scratched. Kata 2, long, gets paid massively. So, very good start. That's where we want to get to. My brother, intraday trading, 22 trades today. Best one was a 2R, worst one was -1. 7 wins, 6 scratches, 9 losses. So this is a 3 to 4 win rate. And then the payoff is about 10 to 4, which solves to 30 to 16, which is 2 to 1. And you can make a living on that. Nothing worse than 1. And was in the money all day. How many days a week do you want to bring home 4R? And no overnight risk. In a bear market. All of them? Yes. Correct. All of them. Here's a Godzilla. Now, he got a late start today. He's taking care of business. I hope it was good business. Because under normal circumstances, he should be on this trade with an exit. Scratches, or maybe, I'm sorry, 0.5. Because he's short from here and gets a little paid. This one, he's trying to get short. It reverses, so he gets out. It rolls over. When the Dragon crosses, or the RL10 crosses the baby dragon. He's short. Second position, cash for 2.5. It rolls over. I think that should have been here, Bill, which would have given you a
I
slightly
was at
better,
lunch. I was at lunch.
and that one gives you 2.7. I don't have my ears on. Let's see. Go ahead, say it again.
I was at lunch at the DMV
Oh,
getting my.
that would okay. I've told you about food being a sign of weakness. Lunch
Yeah,
is a sign of weakness.
yeah.
So
I was
so so
low
work
on
on that.
ketones. Yeah.
So work on that.
So, so
All
just
right.
everybody knows that's why he does a keto diet, so he doesn't have to waste time
Waste
with
time
eating.
eating one meal a day, whether I need it or not. All right. So here's EWZ from Griff. This is the SSC only. It was basically flat for the day. You're going to see this as a massive win on the CD, but good, good. I think we missed one there. Um, this was good, good scratch, good scratch. We missed this one, so pretty good. About a B plus on the execution there. The CD only, you can see crushes today. Gets paid, quick scratch, massive paid, and that's only at one position. When it breaks here, below this one, oh man, second, third position. This could have been 8. Good job, good job. So standard patterns on a standard piece of lumber that trades every day. I mean, you want to talk about making wooden bowls? Holy mackerel! It's scary to think where you're going to be in a year. Some quick frames. These are from Glenn, and we're at the end of the month, and things are getting smashed. So he's standing back and deliberately taking a longer view. So this is good. This is good trading practice to shake up your perspective and adopt the longer view. Notice the difference at the crossover at the P. That's a P1. RLCO outside of the river after an extraordinary run. So these patterns are not just the tradable entities, but they also give us a language to describe what we see in standard ways with clear definitions. P1. And notice how the difference between this and now pain and suffering and now the lowest low of the last 4 months, almost at the Bollinger Band mean. Color code that red in the future. Add a 30 period simple moving average and color it red so you can see the outer envelope of red and then the inner line that we're going to try to get back to when we revert to the mean. You'll find that will really draw your attention. It's a small thing, but you'll be amazed at what that does. Industrials, they have been, I think, slowing down because of energy and war and a resetting of the global supply chains. This is a changing of the guard, and that does not bode well now that this is broken and we're very close to crossing. That means 90 is next target. I would expect that to drift down to 90 in the usual way. Painful. So just got news for you that whole COVID sell-off and joyful recovery, it's in this. Look how quickly this thing changed to go into from the summer to the fall. 4 months ago, it told you that this was changing. Change your mind. And look what it did last time, pre-COVID. It did this. Hey, it's just changing to fall. Well, I'm not going to worry about that now. Smash. Oh, oh yeah, that's right. Hey, and when winter reverses and a 1, 2, 3 entry right here with a wide stop, you got all of that until this changed seasons. You got to pay attention to those things, man. The crossing of the PSAR in a monthly, man, that's all you really need to know for swing trading. Hint. XLP is actually looking pretty stable. These are the staples, and that's that defensive play, just staying in that nice little channel on the edge of the river. And as long as the PSAR on the week on the monthly is intact, any breaking of that is a real negative sign for the market. That'll be the last man standing right there. Treasuries, the destruction of the U.S. dominated global market is what this is, and that's the end of the hegemony right there. When that broke 140, look out below. That's how bad this thing is. Now, the last time it was here, did that. This coincided with 10 trillion being pumped. There's not another 10 trillion to rescue that. New World Order. Consumer discretionary, you can see compared to staples, this thing has already been smashed. Had a nice run. There's the P1, there's the PSAR flip, and now everything is dropping and failing. It's already at the Bollinger Band mean. Next shot fair value around 130. That's another 30% sell off baked into the cake. Yeah, I think we've seen those already. Yeah. Nice work from the team. Let's try to get that opened. There we go. All right, weekend reports. Finally, bearish volatile, as if we needed to be told that. Abnormal, and sure enough, from +3 almost to -Z2, we've been worried about that. We're going to get our fears. We're at 0% exposure in ETF2. That theoretical exposure has been a really powerful guide for conservative protection of long-term retirement assets. That's in the swing course. Monthly, testing the 90 next target, Bollinger Band mean. This is just miserable. Last chance for the plunge protection team to come in. Last time they were able to juice it back up to here, but they could not hold it, and it's already back down to the bottom again. The 9-day already out of the river. The dragon is rolled over into the winter. Fair value down here. Next stop. Weekly, even worse. Already at Z3. 3-day, just a steady decline. For a while, this felt pretty good up here. That was the all-time high right there. What could possibly go wrong? Oh, yeah, that's right, all of it. New 10-day low, new 30-day low, solidly in the winter. RL30 has been a reliable. When that rolled over and you got the owl entry there, and then a collapsing dragon here, and another collapsing dragon here today, how much more do you need? That's a large daily range. We're almost 15% off the swing high. And the Bollinger Band mean has rolled over. Fair value has declined all the way back down to 450. Everything is below its 4-month moving average except energy, utilities, and staples. That's why I say that's the last hope of a desperate man. Energy and agriculture. This one gives you energy and agriculture. This gives you energy. That gives you agriculture. In the Dow, very few things. The healthcare is about the only thing working right now. I don't know how much more Microsoft has left in it to hold back the tide. No surprises here. Look how much trading is going on in tech. That used to be half the size of the Russell's daily average like 2 years ago. That's what happens in COVID. Everybody trades tech. All the amateurs come in and trade tech. Energy, semis, consumer discretionary, biotech, 4.8% daily volatility. Wow. Oil exploration over 4.4. Gold miners, 3.5. Wow. Tons of auto framers. You should not even be thinking about swing trading right now, except one day at a time, starting with intraday. Keep a fifth or even a tenth if you must. Boeing just getting smashed. The only 5-day down and just horrible on his price index. Wow. Almost all the ETFs in that oversold condition. Very few things to write home about except oil. Buyer's market for swing trading one day at a time. I would be looking at this top stack as a way to find the worst things to get short, like Brazil when it's getting beat down, or Alcoa. Today's ranges were so large that nothing is on the squeeze. Here's our Godzilla. So these symbols are extracted from the S&P 500. I am filtering those 500 symbols on the basis of, first, extreme location and 2 time frames. The long-term time frame is like 150 days, or the weekly index. And 0.01, like VeriSign, that means it's in the bottom 1% of its 30-week trading range. And then the medium, so that's the long term. Then the medium term in the D column is looking back 30 days. I actually I set the standard default to 0.2, so there will come some times when things are not miserable and there may not be enough candidates. So I think if it's in the bottom 20%, we could live with that. So I set the threshold to 0.2. But you're going to see that almost all of them are less than 0.1 or 0.1. So there's only a couple like 17, 16, and 19 that are not quite as bad. Gilead Sciences, you know. Then in the short term column, this is a 10-day. I'm taking any score. I'm just reporting the score. So a 0.01 means it's in the bottom 1%. A 0.9 would mean it's near the top of its 10-day range. And then I have filtered out for only the symbols that are greater than 1.0 on their volatility. So these are all abnormally volatile compared to themselves, that their individual target volatility is large and abnormal. So Orly is more than 4 standard deviations of abnormality. That's why that's interesting. But you notice, hey, there's Boeing, Amazon, General Electric, and Verizon. Electronic Arts, Morgan Stanley. And then I'm defaulting the sort with the z-score starting with the most extreme volatility. So I will always read this for targets coming from top to bottom. And because they're so volatile, that means foolish humans have already awoken Godzilla from the deep, and he's coming with murderous intent. He is going to enrage upon Tokyo City. And he doesn't worry about where he's putting his feet. So it doesn't matter where his short-term location is in this setup. I'm looking just at weekly and daily. Okay? And extreme volatility. Godzilla. My brother said, hey, go take a look at Amazon into Godzilla. Yeah. Yeah, that's what he looks like today. From as high as 2,600 down to 2,400, and that's about as orderly a move on a breakdown below the like a collapsing dragon here. If you just drew that across, you'd be short somewhere in this vicinity, certainly here, and more here, and here, and here, with a routine exit somewhere in here. And no overnight risk, no over the weekend risk. Godzilla. And there he is. He's set up for even more next week. So when we take a look at this one on standard set, here's his 30-day box. You can see it's in the very bottom. Here's the 10-day box. And then this is the 5-day volatility range. How we know that this thing is so volatile. Huge gap down. Enormous range day. This is by no means over. It is just starting to enrage. In the standard sniper, let's see if we zoom in on this little rascal a bit. So this is from our standard set of usual suspects, a mix of ETFs, large caps, mid cap specials, key sector representatives. And I have this sorted primarily by the reward to risk ratio on a return to the 10-day high. So Wheaton Precious, consumers discretionary finance, commercial real estate, Alcoa, and pretty well squeezed too. Brazil, the Russell. I already have my targets for Monday. Tesla is just going to be ready to go. The market itself postured for a large move to the upside. Let's see here. Yeah, the market itself is in a Godzilla state. Yeah, you can see the 5-day, the 10-day, the 30-day, the 200, the 150-day. This thing is just smashed all the way down here on every measure, and large volatility. All time, this is big time Godzilla territory. Godzilla. Yeah. This region over here gives you, under more ordinary circumstances, when you can tolerate swing trading using the auto framer style. This is where mechanical entries, standard risks, what that price for the stop would be, what the 10-day high target is, the dollars you would want to capture against a range stat kind of a risk. This gives you all the mechanical framing data you need under normal conditions, but not during a bear volatile. Know your market conditions. All the usual stuff. All right, that's everything we got for tonight. Good work tonight. Some good psychology lessons in there today, I feel. And the Godzilla report is starting to clarify to its standard state. The early subscribers to the Sniper report got the spreadsheet for sorting, because there's about a half a dozen other standard patterns that we use that same spreadsheet to compute different. So this is what that looks like for the Godzilla report, but there's other standard patterns that we look at, like catfish, barbecues, fireworks, Humpty Dumpty. Those are standard patterns that give us extremely critical states ready to break in either direction. Great for options, great for bi-directional trading under all market conditions. The spreadsheet that goes to sort that all out gets distributed to the Sniper report people. But I will continue to post Godzilla in here, because I think if you were just going to trade one, to get your feet wet in that style, that would be the one. Okay. All right, that's everything I got for us today. And we'll be ready tomorrow at 8:30 with the coaching crew in our true storytelling circle. And tomorrow night, I have a late afternoon wedding to go to. So I will be recording the session probably late at night. I should have it probably posted by midnight to review charts. And then we'll do something Sunday night with that stuff. Okay? So no live recording tomorrow is my expectation. I don't think we'll be back in time. So that's everything I got. We shall see you guys live on Sunday and by recording tomorrow.